Hello, traders. What's going on? Jamie Saettele here. It is June 20th, 2018. So can you hear me? And can you see the screen? Yes, I can hear you well, says Mahai. Okay, great. Mahai, what's going on, man? We will get into the equities, as you know, in a bit. All right, so I did the Wednesday or last week's webinar on Wednesday before ECB. I did not see this happening. I definitely did not see that happening. I admit it. Threw her for a loop. Obviously, a lot of other people didn't either because you can tell the way the market reacted. I mean, that was your classic market is wrong-footed or whatever, and yeah, so that did not work out all that well. Although whatever, we protected the risk, I guess, right? Or managed it properly, but trailed stop and didn't do anything completely dumb, like trying to buy after ECB, buy euro, that is. But yeah, if you get rid of this, it looked just so beautiful for a top of some sort, at least for a little while, right? Coming back into the, getting some alerts coming up here. Hold on for a second. Okay, interesting. All right, so sorry about that. I have these alerts set up for some stocks. You can see, look at this. See, I pull this up right here. So I have an alert here. This is a company called Rayonier Advanced Materials, and I have the alert set up on TradingView at 1640, and that was just hit. So RYAM is your symbol there, and yeah, I don't know, worth watching. It's a support. But getting back to our business in FX here. So what in the heck is going on with the dollar? Are we going a lot higher? Are we peaking out? I will offer a few stats, I suppose, on the DSI. A buddy of mine is, I don't get the data, but a buddy of mine did tell me, texted me last night and told me that that Aussie and CAD were both below 10. So that tends to be, sub 10 is extreme. I mean, that doesn't happen a lot, right? That's like maybe a couple times a year, if that. So, just throwing that out there. But with this dollar, we still have this line connecting all the highs back to March. And we tagged it yesterday again. And you had this big yesterday. I think yesterday was actually pretty important. Markets or FX in particular has kind of gone into somewhat of a hangover, right? After last week's fireworks, ECB, what have you. I think yesterday is important. I did a free webinar yesterday. I needed to do some of those every once in a while for obviously marketing purposes. Otherwise, this whole business just won't even work. But I think yesterday is important because you've got this outside day, right? And the outside day just gives you a point of reference. It could end up being like some sort of capitulation on the dollar. This is US dollar, of course, that we're looking at. So this would include the Australian dollar in it, as I just said, Aussie with the sub 10 DSI. And if we can break below this level, yesterday's low, that would, to me, signal maybe this outside day was your final capitulation for the buck, right? At least for the time being. Clearly, this trend is mature. Depending on where you start, I mean, you can count a 5-wave move certainly from here, right, from the March 26th low. So you've got the pattern there. Haven't looked a ton at the intraday momentum stuff, but let me pull it up real quick on my other screen. You do have, I would not consider this to be the strongest momentum in the world here. Here's RSI. We did go, up through 70 here after ECB, the day after, and since then you do have some divergence, although it's not quite divergence with my rule, right? For me, I need to see RSI below 65 in order to have solid divergence, right? That's not the case right here. Like these are the real divergences that we want to see. We don't have that yet. Doesn't mean we have to get it, but I'd be more confident in like actually fading the dollar up here if we had something like that. Okay, so what about some levels? So saying that yesterday's low is important. If you get back below there, it would also send you back into the parallel that's the the very long-term 25 line. That's the big upslope going all the way back to 2011, and that was one reason why I actually thought that we had a good top in place for the dollar, was because we had reversed off of that, right? So you get back below yesterday's low, get back below that, that parallel. It kind of, to me, somewhat like erases this, right? And says this was all just kind of a big false break, screw you, in your face, whatever. If we eke out a little higher, you do have the highs from November, right? November of last year at 12,099. Let's just call it 12,100. And if you scroll across the screen, you can see some good action around that region, right? Including actually last June, believe it or not, exactly 1 year ago. So if you went into a coma and woke up, you'd be like, well, the dollar hasn't gone anywhere. When, of course, we know that's not really the case. So yeah, two things to pay attention to, in my opinion. 12,100 and yesterday's low. We get below yesterday's low, would be awfully interested in a short here. That's what I will go with that. All right. What about DXY? So the thing to know with DXY on a shorter term type of basis here is these, I'll go candle chart here, but we eked out highs, right, up through the May 29th high, the last 2 days. Actually the high is the exact same level today as it was yesterday. So clearly some selling up here. And that's key or important because Euro has not done it yet, right? It turns, we see that a lot. We still have the full channel extension up here. You've got the November high in DXY up here. Just you have to lean towards being a seller of Euro up here. It's kind of that simple. Cannot chase up here. This is resistance. I'm not selling into resistance. And we'll talk about what exactly would make me want to be a bull, like to buy. Excuse me, I'm sorry. We will talk about exactly what would make me buy Euro. In the meantime, this is what I talked about yesterday at length during the free webinar. Ty Andro says seller or buyer of Euro. So I am bullish Euro, but I am not yet long Euro, right? I'm a Euro bull, like I said last week during ECB when the Euro was just getting demolished. I said I'm a Euro bull, but I'm not a fool, meaning like I want to be long Euro, but need to have the right conditions to be long Euro, right? You need to have the right setup. You need the market to give you some evidence that you should be long the Euro. Just because you think the market's going to go in a direction or a certain direction does not mean that you just jump into the trade, right? You need to have some evidence. There needs to be a setup. There need to be some rules to the setup. So on DXY, if we were to resume a little bit higher, I will watch basically the 95.90 area, okay? And that's a couple things. You have a parallel up there. You've got the 3-year average. You've also got or not two equal legs, but where wave 1 would equal, oh, sorry, not that, this one right here. This wave 1 would equal wave, or wave 5, excuse me, would equal wave 1 if we're calling this 1, 2, 3, 4, 5. This is like a real small fourth wave though. So there's some other options here, right? And like this could end up being a triangle or something. We could have a lot of stuff go on here, but that would be a level out in the future that we would potentially pay attention to at some point. So my concern is right now, right? I'm looking for dollar to come off a little bit. So, you know, clearly have some resistance up here because you had that spike up in the dollar tank, you know, in the euro yesterday, and then we closed, you know, decent, you know, well off the high. Had another spike in the dollar, quick spike lower in the euro this morning, and same exact thing. So there are clearly dollar sellers up here and clearly euro buyers. And let's get into the euro. So where's the level on the euro that we're talking about? Well, it's actually our good old friend daily reversal support, right? Remember, daily reversal support. If you don't know what this is, because I do see a few new people here, then you can go into the website resources and go to reversal support resistance, right? And there will be an explanation of that. This is actually a pretty good example, right? Low bar for the move, closes support in the future. Okay, that just happened in euro the last 2 days actually. So the low bar is actually May 29th, right? Right here. The close of that bar is 1538. Well, what's been support the last 2 days? 1538 essentially, right? Yesterday's low is 1531. Today's low is 1537. So there is something here. It would be maybe a bit risky to call this a tradable low, but certainly reward to risk is on your side at this point, given the action that we've seen the last 2 days, okay? You can see the red line I have here. That is 1595. That's the high volume level back from ECB, actually right after ECB, the day after. So if we can clear up through there, that would be really the first sign, in my opinion, that you have something to work with on the upside. And then we'd have to zoom into the near-term charts, or I would, for potential long entry. So Ty, I want to be a bull. I do think it's going higher. I just, you know, I don't have the setup, at least according to how I enter the market. All right. There is still the possibility at some point, of course, that we try to get a bit lower. I will say that it's, again, I'm like beating a dead horse here talking about this, but I think it's a good sign that euro has held up while DXY has eked out a new high. Okay, I do think that's a good sign. I do think that favors a bounce from here in euro. You know, but if that's wrong, if that proves completely wrong, and we do get yet another push in the dollar, another drop in euro, then watch this line here. It's simply this parallel extended off of the May 29th low, and that's going to be down near 1455, right? 1454. And I wrote in last, I guess it was last Thursday's update, that is 5 square roots, right, from the yearly open. 1, 2, 3, 4. You can see the red one is 5, right? That would provide symmetry with where the high was, which was 1, 2, 3, 4, 5 square roots above the year open to the tick actually in February. So, you know, that is also something to watch out for, okay? So certainly a lot of questions to be answered. I know that I will prefer the long side in euro down here. But again, just waiting on, you know, an entry, if you will. Another interesting observation dollar-wise. So dollar Swiss, right? We had that drop, and the rally that we've had has actually hit the underside of the former support line. We've been trading up here for basically since ECB. So you do have resistance here as well, which maybe adds a little bit to the idea that the dollar is indeed peaking out for at least a little bit, and that there's an option to be long euros or short dollar Swiss for that matter. Okay. British pound. British pound, I have on my notes here written now or never. That's obviously not 100% true, but this is a really big spot, okay? You can see this is the 2017 trend line. I mean, that is big. That's where we're at, okay? We've retraced 50% of the rally from the January low of last year. You're on a lower parallel as well, okay? I'm looking for a low here in pound. Maybe we saw it today. We did slip below yesterday's low by 2 pips, and we've turned up very so slightly. So here's an hourly chart. If we can get a little 5-wave action on the upside, like, a 1, 2, get a 3, 4, maybe get a 5, get 5 up, make ourselves a nice little bottoming pattern down here, then I would be all about a potential long entry or a long entry in cable with your initial resistance back up on this magenta parallel, which was of course resistance last Thursday before everything completely got demolished. And yeah, that would take us to about 34 with eventually up towards 36, 35.80 or so, which is your confluence of the downtrending parallel, right? And the uptrending channel. So certainly the right place for a British pound low, okay? All right, for me, the closest thing for entry right now as I sit here and speak to you is going to be dollar yen, okay? I am looking for a short here in dollar yen. Here's a question from Ty saying spot for at least a bounce. Right, so what are you referring there to the pound, to the British pound? Yes, right, exactly. So yeah, I do think this is the right spot for a bounce. Absolutely. Okay. I do think it's a spot for a bounce. I do think that your first resistance is probably going to be up here around 32.90, essentially where you opened the month, and it was also the high from last Friday. Yeah, so that's where I'd be looking initially. So you get a bounce, a pullback, and then that would be the pullback that we probably want to be buying, probably near 32.15 or so, stops under 31.50, and try to take it up to 34 and eventually 35.80. All right, so dollar yen is the spot where I do think there's a trade to be had here. Kind of tough to short it right here, right now, because it's sitting right above its median line. This is a great fork. It's been quite useful. Tough thing last week. Had a short at 110.49, stop 110.90, and got stopped out literally high tick before it turned over. That's okay. It does happen. So I would put 110.50 essentially as your resistance again. 110.40 would be, or 110.39 would be your 618. This is not really a 5 down though. But yeah, I would put 110.50 as it's a square root level. Okay, it's been resistance, maybe a couple ticks shy, right? That's 110.46. You can see over here, and then right here being 110.49. So might be trying to short again at 110.49, right? One thing that could be going on with dollar yen, and I kind of hinted at this yesterday, is the dollar yen could be in a triangle from the May 21st high, okay? And in that case, this would be your A wave, this would be your B wave. I think there's one thing we can all agree on, and that is that this move up, right? These, proposed B wave, if you will, is certainly corrective when compared to this decline, right? I'm not so sure if this decline is a correction or corrective or impulsive, and frankly, I'm not all that concerned. All I know is that when compared to this, it's certainly more impulsive. Okay, it doesn't mean that it is impulsive. It just means that I'm open to the possibility of us breaking this low, but more than likely, probably going to have some support if we do end up coming off. Probably going to have good support down at 108.88. It's basically the month open, a few ticks shy of that or below that, but it's also 618 of this drop. And if we were to drop into this area and bounce, we'd probably, I'd have a good inclination that we actually are in a triangle, right? Because of the alternating legs relating by 0.618. So as it stands now, your resistance for dollar yen is probably 110.40, 110.50, and then would be looking to short that. Can probably have relatively tight stops. I mean, it would make sense for us to stay below this high over here for 110.61. I don't want to put the stop too tight and end up getting nicked out again before we, before it moves in our favor. But essentially be looking probably for the same entry, 110.49, 110.50, stop 110, above 110.90, and looking for that 108.90 area. So good reward to risk on that idea. Ty says, can you draw it? What Ty would you, or what are you referring to specifically? I'm happy to draw whatever it is here that you're looking for, the triangle. Can I draw the triangle? Well, we don't have a triangle yet. Here's what, right. So we don't have a triangle yet. It's just my suspicion that that we're going to get a triangle, okay? So if I go into this 4-hour chart, okay, 4-hour chart. So I don't know if we have a triangle yet. It's just my thinking that we may actually have a triangle because this overlapping nature, okay, and this may very well be a three-wave overlap, or not overlapping, but a three-wave drop. When you start to see back-to-back corrective activity, you've got two options. One is a triangle, one is a flat. In this case, a flat would mean we go to a new high and then turn down. I don't think that's going to happen. And a triangle would mean that you end up going like this, okay? And then you would have your triangle. You see what I'm saying? Again, I'm not the greatest artist in the world, but so it's not that I can draw a triangle yet. It's that my suspicions are that we actually are in a triangle. It would kind of explain all of the corrective activity that's happening in dollar yen. But the bottom line here is that you need to know the levels, and the levels are, down here, okay? Looking at that 108.90 spot, targeting it at least. Okay, all right, so that is the dollar yen deal. Let's go right to the Nikkei actually, because it might help shed some light on why dollar yen has some downside potential here. Okay, so here is the Nikkei. Had a sharp drop, nice rebound here, basically today, and we're coming right back into that 200 period average on the 4-hour chart. Okay, talked a lot about this average being one that, for whatever reason, tends to work pretty well on the Nikkei. You can see it on the way down here. Okay, this year, some support, and now we're coming up into it from the bottom side, so looking for resistance. And obviously, even if, let's say, even if we're ending up in some sort of a triangle here, if you pull back a little bit, get a couple hundred points on the downside, you're gonna have a little tailwind, I think, with dollar yen on the downside. So again, don't have a strong opinion on pattern here or a view on it, but I do have resistance for the Nikkei, just a tad bit higher. Okay. All right, let's go to the dollar CAD exchange rate. And dollar CAD, as I said, the Canadian dollar DSI is sub 10 right now. That's considered extreme. So I am looking for dollar CAD to turn lower fairly soon. The setup here is kind of the same as what was described last week, and that is, if you pull back, you're going to want to watch the center line of this channel for support. Okay, Ty asking, what is DSI? DSI is a sentiment index that is published by a company called tradefutures.com, and it's a survey of floor traders, and it oscillates between 0 and 100. In reality, I don't think it's ever actually been 0 or 100. I think I've seen a 99 before. But yeah, what it does is, a reading basically above 80 is considered kind of like extreme bullish, and so the market's at risk of reversal. Below 20 is the opposite, right? Extreme bearish at risk reversal. Once you start to get below 10 or above 90, it'd be considered like real extreme, and those are the types of readings that tend to give way to fairly sharp reversals, even if just for a couple of days. But a couple things to pay attention to here in dollar CAD. Again, looking for a top of some sort up here would make a lot of sense if it happened right here, because you've got the 75 line of the channel, right? Remember, we kind of came off the 25 line. But another thing I'd like to point out is actually the June 21st, 2017 high is 33.47. So tomorrow's June 21st. And if we get up there, you'd be tagging where you were 1 year ago. And that would be, I think, interesting from the fact that you probably would trade off of it, right? So don't have any sort of setup here right now. I do think that CAD's a bit extended in the near term, dollar CAD that is. So I am looking for us to turn down. At the same time, I do think you're going to have good support if you get back down to 31.40 level. Okay. Let's make this right here. All right. So that's connecting the highs from August 2017, actually, and from October 2017. So we get up here, combine that with the fact that you get the 621 2017 high, and you've got DSI at 10, and you've got oil potentially coming off support after a false break lower. I think there's an opportunity to sell up into this 33.47 area. Okay, that would be my bet, my contrarian play on dollar CAD, be to look for a short up here. All right. So, it's like 50 pips short of it, not quite there yet. Might get there soon. All right, seeing a little bit of a bounce here in cable, like we talked about. Let's see if we can finish the day without, the dollar coming back, and maybe we'll have an opportunity to buy it tomorrow with an order overnight. Going to Aussie and Kiwi, actually very clean levels in Australia, or the Australian dollar and the New Zealand dollar. So we're just going to look at basically the charts from last night, and I'm looking for a low here, a bigger low, probably down near 72.90. If you get a bounce before then resistance should probably be 74.30.40, right? I was hoping to get a move up into 74.40 today, this morning, preferably, in order to sell it for 72.90. But like any good, great, strong trend, it's not going to let you in, right? So that therein lies kind of the trick. You either have to get in on the initial break, or get lucky, get a bounce, and short it into that. But so we know, so that you guys know exactly what it is that this, what this is. This is simply your, we'll get rid of everything here so I can draw it. You can see what it is I'm talking about. This is simply the dominant angle, right? Which would be very hard to argue that this is the dominant angle in the Australian dollar. We are extending it off of the low, and that would be where we're looking for a low, right? It's going to be 72.90. As I wrote last night, you'd be undercutting that 73.29 level, which is the low from May of last year, right? If you undercut that low, you're probably going to get some panic in the market, at which point we should be looking for a low, and it's probably going to be again down near 72.90. That's where this line comes in, okay? Let's actually see what this looks like too. So essentially the next couple of days, it's actually the same angle, isn't it? That's nice. Oh, not quite. This is a little steeper. So essentially the next couple of days, we might be looking to fade. So it might be some scary type of entries, right? It might feel a bit scary, but it's supposed to if you're trying to trade a turn. But 72.90 in Aussie would be a level for a low, as well as like I said, that 33 133.50 or so for dollar CAD. Okay, Kiwi could be in play later today. All right, we've got the I think their GDP, is it? It's today, Wednesday. Yep, GDP. So that will be at 5:45 where I am, 6:45 New York time, and it will be there Thursday in New Zealand. So two levels to pay attention to for Kiwi, okay? Basically 69.60, okay? Decent horizontal level, can't talk, and a good parallel. Again, this parallel for those, again, there's some new people here, so do want to kind of explain what this is. So what we're looking at, this is the channel, the original channel, okay, is simply drawn off of these two highs. Simple enough, right? Well, we call this the half parallel extension, the red line, because it's the extension of the center line to the lower parallel. Okay, as you can see, that parallel is pretty big, right? I mean, it was support resistance at times just perfect, and we broke down from that level. Okay, the full extension oftentimes is where you make the bigger price low or high if it's the opposite situation. And in this case, that was the exact low in May. So we would be looking for that to provide support again, and it's near 68.20. Okay. So those are the two levels to know, basically 68.20 and 69.60, and that's all you got to know for Kiwi. Also, if I go to the daily chart, okay, we're coming back to this long-term parallel as well, and guess what we have down here? We've got the daily reversal support at 68.11, right? It's not technically daily reversal. Actually, yes, it is daily reversal support. I'm sorry. So it's the low bar for the move from 2017 in November 2017, and it's 68.20. Obviously, there's a bunch of stuff around here. You got all these lows from October, November, December of 2017. It's the base from last year. You got lows down here from May of last year too. So there is a load of stuff to look for, to look for massive support down in this region on GDP or thereafter, or maybe even later this month. I don't know what the reaction is going to be. I do know that 69.60's resistance and support should be 68.10.20. Okay. All right, let's go to copper. Now that we have gone through Kiwi and Aussie. All right. So I came in this week kind of warning that copper could get real ugly on the downside, in part because of the COT ownership profile in the commitments of traders. So, all right, so here's copper. Long term, you can see kind of a big failure on the breakout from the week prior. And then we had the short-term chart. This was not yet confirmed as far as the copper futures chart, right, with the fork. Well, we are confirmed now. Okay, so we are confirmed here. We have broken down under the median line. Decline might be getting a little extended. I'm not. So I'd be looking for I'd be looking for some resistance. You can see kind of here, right around here. See all those reactions and over here. So we get a bounce if you get a bounce in copper a little bit, I'd be looking for resistance up around this parallel right here, which is going to be essentially 309. And then I'd look for downside continuation. And if this plays out like the copper COT, like I said before, is a record, right? So do not be surprised to see a much deeper than expected drop in copper, in which case I think you could get down to 276 at some point in July. Okay, that would be a confluence of this parallel, right? The lower parallel here. So you got the lower parallel from the fork. And then you've got the other parallel here. Ty asking, how do we keep up with your analysis? Do you do it just once a week? Do you do update? I haven't found them any. Oh, goodness, Ty, yes. No, they're every day, my friend. So I'm assuming you're at the website, okay? When you log in, okay, all the recent posts for members are over here, okay? You'll have a couple a day, right? So long-term charts are here. I would watch the tutorial as well. But here's the swing update. So, there's a couple of different ways to find it. If you go to recent posts, again, you'll have the most recent stuff here. If you go to long-term charts, and you can click on daily swing updates, and that will give you all the swing updates for ever since we've been writing them, which goes back, like 5 years. So this would be yesterday's, okay? And you can see all this stuff here. So yeah, these are the levels, right? If you go to intraday charts, this is where you'll find Mike's updates, his intraday updates, right? The exact trades for entry will be in the swing updates, the stuff that I post. So, there's not going to be, usually there's trades open, but right now there's just not. And right now there's just two things as of yesterday that, was probably the closest to being triggered. And that would be the dollar yen short for resistance. I said 110.30, probably thinking more like 110.40, 50 now. And then Aussie short looking for 74.40 for resistance. Did not get there today, so probably won't get there. But yeah. So no, we write every day. I hope that helps. I hadn't seen this. Thank you. No problem. No problem. All right. Moving on to indices. So we looked at Japan. The Dow continues to act pretty terrible, but funny enough, I do think you might have some support down near 24,460. The S&P, a bit frustrating, I suppose, in that we had support kind of marked down here, right? And it's just not happening. Didn't get there. So yesterday during Europe, we had fallen pretty sharply and down into, but then it reversed during Europe. US opens, we all know that the market's not allowed to fall during the US session, of course. I say that in jest, but no clarity here for me. I will say this. If we look at, so like from a trading perspective, right, with the options and the short, I told you last week that I had bought some put options. I got out of some of them yesterday. We opened during the US session. It's annoying because again, it wasn't able to get out at the best price because they were SPY options, which you can't, I'm not trading them overnight, I'm trading them during US hours. No real clear pattern here for me on the S&P 500 on the overnight session. This chart, which is the 10-minute, remember this is the 10-minute chart of SPY though. This chart I had last night, right? We had a 1, 2, you can see 1, 2, 3, 4, 5, 3, 4, 5. So that gives you an impulse to the downside, in which case we should be looking for another leg lower. It might be from here. This could be this could be AB 1, 2, 3, 4, 5, right? 270, 670. Watch that level for resistance on SPY. So I would not necessarily maybe look at the overnight session. I just look at regular trading hours, in which case you can just look at SPY, which is going to be the same as just the S&P cash index, right? So I'd watch that for now, like the next, the next couple days. NASDAQ, still on this channel, continues to trade within this channel. Again, yesterday you did have it take out the low from overnight and then reverse. Very difficult for me to say that I'm buying equities right here. I mean, it's extended on a weekly basis. It's extended on the daily. It's extended, near term. It's just not. I just don't think it's a good bet. I'm not chasing. I'm not really a momentum chasing guy when it comes to the indices. Support, I will say, just like the other charts, the other markets like the Nikkei, this 200 period average on a 4-hour chart does tend to be pretty useful, right? You can see throughout last year on the big run up in the fourth quarter, it was great support. Even within the early year, volatility that we had, it was pretty good too, right? So you had resistance, support, resistance. We've been up above it now since the first day of May. So, a tag of that, which is upward sloping, should be support at this point. And that's 70.50. If we get there over the next couple of days, maybe, or even early next week, it might be 70.60 or something like that. And yeah, that's going to be, that's 240 points lower. So on the NASDAQ. So, if you get down there, we get another sharp drop. I would pay attention to this line. It's the center line of the channel, and the 200 period average on the 4-hour chart. Okay, so am I shorting this? Not really shorting the NASDAQ right here. It is the strongest index. Probably don't want to short the strongest index, at least not yet. It's not stupid enough to short at this point. But if we do turn over, I'd be looking for support down here. All right. Hope it helps. Didn't look at gold yet, or crude for that matter, so let's look at both of those. So we are sitting on a decision point in the gold market. Near-term action is literally the exact same as euro, dollar as well. And, if we can get through yesterday's high, just like I said, if we can get below yesterday's low, yeah, silver too, I will look at that, my silver too. If we can get above yesterday's high in gold, I think it'd be a positive, right? Because you are at a point where you could make a big low. You're at a point where you could make a big low, right? This could be yesterday's move. This candle could be big outside kind of exhaustion on the downside. Perfect parallel here. It's the exact same as the trend line that goes back to 2015 and 2016. And then, of course, you've got this here. So you can envision the possibility of having a wedge of sorts in gold. But again, this is a guessing game right here. I mean, long with a stop below yesterday's low is a trade, but don't be surprised if you get stopped out of that trade, right? Not a whole lot of evidence here to say that the market has yet bottomed. Again, we get through yesterday's high. I think that there's a good chance that we have indeed bottomed in gold. All right. Until then, I hate to say it, but until then, you do have the possibility of going back to test the low from December, which would be all the way down at 1235. It's also the 200 period average on the weekly chart. So we know exactly what we want to see in order for, to say that the tide has turned. We just kind of need to see it first, right? So you still have, there is a divergence in place, or a non-confirmation, I should say, with silver and gold, right? Gold is all the way back down here, where silver has still not broken below the low from April, right? So silver is the stronger of the two, as it has been for a while. Just such a big spot here. I mean, if I highlight this here, look at this. I mean, look at all of the action that you've got right here. Is there anything on a short-term chart? At this point, trying to kind of read the patterns in between the lines is probably an exercise in futility, right? We're trying to make something out of nothing at this point. I think that the silver market turns up, right? I think that, look, despite the dollar run we've had, silver still hasn't been able to break below the April low. I don't know. Does that tell us something, or am I making something up here, right? To keep it simple, like, I wrote in a post last week, if silver can get through 1734, then whoop-de-doo, right? Whoop-de-doo, and let's go a lot higher. Until then, you're really just, you're probably frustrated, and you're probably trying to make something of nothing. I will say it's getting to the point of such peak frustration in the silver market that if we were to see a nice 5-wave rally here, or maybe somewhat of a bottoming pattern on an intraday chart, then I'd probably end up going with it, and I'll let you know if I see something. As it is now, it's a waiting game, just like it is with gold, just like it is with the dollar, right? Dollar's at resistance, gold's at support, silver's at the bottom of its range, got non-confirmations all over the place. Euro not making a new low, DXY is making a new high, gold's making a new low, silver's not. All these fractured markets suggesting that something's wrong, or something is, about to change, or, in the market, something's going to turn here. And which way have we been going? We've been going the way of the dollar. That says that if we're going to change, then we're going to change the other way, which means dollar lower, probably gold higher, probably silver higher. Okay. Okay, what about crude oil? 4-hour chart for crude. False break to the downside, looking higher in crude oil at this point, probably for 69 bucks. Okay. 69, let's call it 69.30. You get those highs over here, 69.30, right? That's the center line of the channel all the way back to the January 2016 low. Great resistance on there last year. Support on there this year in April. Turned down from it on May 30th. And now heading back for that level, in my opinion. Okay. All right. So I am pretty much finito here with my stuff, my analysis. Um, Thank you all very much, as always, for your time. And, when I do these webinars, it helps me just as much as it helps you because I'm going through these markets kind of more in detail and explaining it to people. It's like that old saying, when you learn stuff better when you teach it as well. Ty says, same time next week, question mark? Yeah, so Ty, what you want to do is when you're on the members homepage, we always have the weekly webinar schedule right here. So that'll be updated like over the weekend or on Monday, and you will see when the webinars are. So you can see that Mike has his webinars Tuesday, Wednesday, and Thursday, and it has the times, 8:30 Eastern time, right? I have mine today, 11 a.m. Eastern time, which is just finished. So always check the schedule, and I'm glad that you know where to find all the analysis now, okay? Okay, Pete, thank you, sir. Thank you very much. Everyone have a great weekend. Ty, it was great to meet you too. I'm glad you're here. Mahai, have a great day as well, my friend. And I'll get this up and archived for you folks ASAP. All right, I'll talk to you later. Bye.